Happy Friday, everybody. This is Norris with the Norris Group. This is episode 320 on September 2nd. And if the interest rate mortgage tax deduction goes away, what will happen? That and much more as we cover the biggest headlines in real estate. You do not want to miss the radio show this week. Of course, these are the pre-event episodes before I Survive Real Estate. This week, we have the president of the National Association of Realtors, Tom Solomon. He's been in real estate for 40 plus years. And this week, he's going to be covering reasons why people are having a hard time with financing, a current bill aimed at veterans, and a lot more about the real estate in the realtor sector up on the radio show and podcast. First, some fast headlines. Home prices increased 5.1% year over year and 1% month over month in June, although the increases were primarily located in the South and the West. Profits from independent mortgage bankers has increased twice as much in the second quarter, now at $1,686, up from $825. That's good. CoreLogic reported a 2.1% decrease in distressed sales, putting them now at 8.4% of all total sales. And the National Association of Realtors released their latest pending home sales index for July, showing pending sales up 1.3%. The premium price for a new McMansion has declined drastically to only 117% premium, down from 138% just 4 years ago. McMansions are homes that are 1.5 to 2.5 larger than the median home built, and prices for McMansion have fallen in 85 out of the 100 of the largest real estate markets, and premiums have fallen the most in Florida. Currently, there's around a 20% premium in place for new built homes over existing inventory. News came out this morning that the U.S. added fewer jobs than expected, but unemployment held steady at 4.9% across the country, and in July, California is at 5.5%, so not too far off. Where's the best employment? South Dakota, New Hampshire, and Nebraska, with North Dakota coming in fourth, so all of those are under 3.1%, so what's going on over there? Interest rates, interestingly enough, industries that are seeing wages increase the most are the ones that don't pay that much. 50% can be accredited to the minimum wage, according to a Bloomberg article, but the rest is due to employers having a hard time finding people that will stay in the job. So it's really increasing wages to retain talent. I'd also like to point out from personal experience and from me talking to government officials that we're having a hard time finding specialty job workers in construction, things like tile and granite and masonry in general. I wonder if you're having that same problem. On Thursday, real estate has finally graduated. You know, sort of like that kid that had like the 7 or 8 year college plan. Well, hey, better late than never. S&P Dow Jones and MSCI has given real estate its own class. And it's the first time a new sector has been created since 1999 under the Global Industry Classification Standard Structure. I didn't even really know that existed until today, but this was pretty cool. After all, real estate has outperformed the S&P 500 by 6% since 2009. So mortgage REITs will remain under the financial sector, but REITs and real estate operating companies are now part of the new 11th sector. So as we separate real estate from the financial sector, will we find out the financial sector wasn't all that it was cracked up to be? I don't know. Will it drive more people to the real estate sector because now it's a little bit more visible and transparent and we get to see more just about real estate? That will be interesting to watch over the next year. Gloves are off. The Mortgage Bankers Association CEO David Stevens said the professional association would consider giving up mortgage interest tax deduction as part of a wider conversation about American tax code reform. Stevens said entry-level homeowners don't itemize anyway, and the wealthy don't care, and it's really the middle class that really take advantage of this tax tool. So they'd be willing to give that up, but want to revisit the hefty regulations that came in 2006 via Dodd-Frank and broader tax reforms because we need to focus on housing. Affordability is becoming an issue, and builders just aren't aggressive building under the current conditions, so interesting that they would be willing to throw that out there. No word on who they're supporting for president. But as you in the real estate industry, as an investor or a realtor, if this tax deduction goes away, what do you think? Is it a big deal? Do people really care? I'd love to hear your feedback. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. We don't want to miss you coming up on a whole bunch of events we've got going starting in September. The 20th, we're going to be a part of the Apartment Owners Association's $1 Million Trade Show and Landlording Conference in LA. September 21st, the next day, stay put, cash out, or change seats with Invest Club for Women in Irvine. The 28th with Invest Club for Women and Robert Hall and Associates in Glendale doing that same talk. October 6th, Stay Put Cash Out or St. Jane Seats. We're up in NorCal for the last time for the year, so we'll be at SJREI in San Jose. October 8th, Cashing In on a Boom. This is the one that sold out in February. If you haven't attended, you have to be a member, but it's a full day talking about the strategies that are working in this market in California, so we'd hope to see you there. October 21st, I Survive Real Estate. We now have 10 seats left. They keep going down. If you plan on attending live, you do not want to miss it. We are sold out for sponsorship, so we only have general seats left. Go to isurviverealestate.com. November 5th, Cutting Edge Financial Tactics Brunch will be at the Mission Inn Hotel and Spa. And then November 6th, our third annual subscriber brunch, where we invite all of our subscribers to come to the Mission Inn for a beautiful brunch and talking about a little mini market update, a few strategy sessions. It's great networking. All of that information is on the website on how to attend all those events. For more information on hard money lending, including fix and flip, buy and hold, and new construction, starting at just 6.9%, check out the norrisgroup.com. You can get pre-qualified or apply for a loan right there online anytime you want. Or for more information about passive investing with trust deeds, check out tngtrustdeeds.com. With that, that's it. Have a fantastic weekend, a long weekend, and we'll see you next week.